Good afternoon and welcome to BizTech Asian Midday Market Watch. It's the 19th of August. I'm Samantha Voon and my co-host here with me, Brian Fernandez. So let's start by taking a look at the summary of market actions today. Now, Asian markets paused following a robust week of for the global equities, which saw their best performance in 9 months. Now, investors are increasingly hopeful that the US economy will sidestep a recession and that easing inflation could lead to a series of interest rate reductions. Now, at present, the S&P 500 and the Nasdaq 100 futures have edged up by 0.2%, building on last week's positive momentum as traders remain optimistic about a gentle economic slowdown in the US. Now, all eyes are on Fed Chair Jerome Powell's who is scheduled to speak at Jackson Hole on Friday. Now, investors are keen to see whether he signals a potential rate cut soon. Now, the Fed isn't alone in this shift. We have Sweden's central bank also expected to lower interest rates this week, possibly by as much as 50 basis points. Now, in the currency market, the euro remains steady at $1.1025, just below last week's high of $1.1047. Meanwhile, the dollar was at 147.79 yen, down from a peak of 149.40 yen last week. Now, a weaker dollar coupled with declining bond yields supported gold prices, which remain near an all-time high at $2,506 an ounce. Brian, over to you.
Now, over in China, the yuan has strengthened, supported by expectations of imminent US rate cuts. However, ongoing weak Chinese economic data may limit further gains. Now, despite a recent rebound due to the weaker dollar, analysts suggest the yuan's rally may be short-lived, especially amid concerns about China's economic prospects and potential money easing. Now, overall, investors await a slew of bank releases and inflation data this week. The Bank of Korea will release its rate decision on Thursday. Inflation data will come out from Japan and Singapore. Singapore will be released on Friday. Now, China will also announce its 1- and 5-year loan prime rates on Tuesday. Now, that's all for today's market updates. Now, to give us further insights on markets, we have our guest today, Tim Watra. He's the Chief Market Analyst at KCM Trade, coming out to us out of Sydney, Australia. Tim, it's always great to have you on the show.
Thank you very much, Brian. Good to be with you. Hi, Sam.
Hi, Tim. So just to get right into this, what is your view on market performance in the first half of today, Tim?
Yeah, a fairly subdued start, you'd have to say. We've had a lot of volatility the last couple of weeks, and I think now the market is just taking that proverbial breather to assess the state of play heading up to some event risk later on this week. So I guess if we look across the region, you mentioned a few central bank decisions, such as in Korea, for example, maybe keeping a lid on some enthusiasm in the Kospi till we see what language emanates from that meeting. In the Nikkei, that's moving lower today. I suspect that's tied into not just the softer data point we saw this morning, but also that dollar-yen rate has moved lower during our session today. So I think that some of that yen weakness is taking a bit of a toll on the appetite for Japanese equities so far today. And of course, in Australia, fairly muted performance there. We've got the RBA minutes to look forward to tomorrow as well, to try and gauge, I guess, the path of policy there going forward. So I'm not surprised that we're seeing a fairly unspectacular day, but I think we could see certainly volatility levels spike up perhaps later in the week as we head to some of that event risk that I alluded to.
Now, Tim, I want to talk about commodities right now. We've had a de-escalation of tensions in the Middle East. How is that impacting gold? Well, gold has hit a 2,500 mark. And also, of course, oil. What's your view on both of those two commodities?
Yeah, so it's still obviously ongoing situation, a very headline-driven times we're in at the moment regarding the Middle East and those geopolitical impacts on commodity prices. So right now the talk is of a potential ceasefire. We haven't seen, I guess, that anticipated or feared retaliation from Iran yet towards Israel. There's been some talks behind the scenes. There's been some I guess coercion going on there to try and keep a lid on things while we do have these talks going on. And I guess what that has meant, I guess, for the oil market is that some of that risk premium we saw built into the price last week has now been taken back out of the price. So oil is a tough one to get a gauge on at the moment, a sort of a neutral view on that at the moment. Myself, I mean, I think there's certainly opportunities there in terms of trading possibilities. We are seeing it move 1.5%, 2%, per day at the moment, but it is very much headline driven. So I think it just pays to be fluid if you are trading oil at the moment. But right now, some of that risk premium has been taken out of the price, and that's why we've got the US crude contract trading around that mid 70s level, around $75, $76, rather than sort of 80 where it was at times last week. But in terms of gold, you mentioned that. So that is still receiving some safe haven flows. It's a bit of a double-pronged effect, though, for gold. It's got safe haven demand, and also it's got demand ahead of expected US rate cuts. So I guess those two, paths are pushing gold higher to that psychological $2,500 level that we've seen it hit right now. So, I mean, I think we could see a bit of choppy trading this week ahead of the Jackson Hole event. Potentially some further upside for gold in the medium to longer term as we do transition towards that lower interest rate environment. But I think the reason we haven't seen gold kick on higher today is just because that 2,500 level, that's been watched for some time. And I think there is some profit taking going on, and that's constraining some any potential moves higher today for gold. But longer term, still looking fairly healthy from a fundamental point of view.
Tim, as you mentioned, all eyes are on Jackson Hole. That's investors zooming in and are razor sharp focus on that. Is the expectation now for a smaller or bigger rate cut? 25 basis points or 50 basis points?
That's it. That's the question. That's what I guess we'll all be hoping that maybe Jerome Powell can shed some light on at Jackson Hole, of course. Now, I think the market, right now overall is leaning more towards 25. And I think the data from the US last week would support that if we look at those retail sales figures, albeit a lagging indicator. And I don't think that the Fed really wants to, upset the market too much or do something which could be interpreted as, okay, they're late to the game in terms of cutting rates if they did go to a 50 basis point cut. So we'll hear from Jerome Powell, but still favouring 25 at this point. So, we're going to have a lot of focus, as you mentioned, on that this week, but not just Jerome Powell. Of course, he is the headline act, but we have other central bankers there as well. So I guess we'll be looking for any differences, from the likes of, say, Jerome Powell versus Carney from the BOE and some other places, see if there is any policy divergence, or are they all singing from the same hymn sheet in the sense that they do forecast that we'll be seeing, a fairly steady flow of rate cuts moving forward. I don't think Powell will give the game away too much. It'll be very much, data-dependent language, but we might get an inkling as to where he sees the risks. Are they to the upside for inflation or to the downside? And I think that's where we can start to maybe price in a little bit more, whether we're looking at 25 or 50 come September. But right now it's looking more like a 25. If you're looking at, as I said, some of the recent US data, and also what the interest rate futures are currently pricing at.
Okay, thank you so much, Tim, for being on the show.
My pleasure. Thanks very much.
We'll be speaking to Tim Watera, Chief Market Analyst at KCM Trade. Now, this has been BizTech Asian Midday Market Watch. Be sure to keep informed on the latest market updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.